It has been a turbulent year for the banking sector following the collapse of 3 banks and the uncertainty brought about by the capping of interest rates. Banks are now looking at other alternatives to grow their balance sheet, even as the Central Bank of Kenya continues to closely monitor the sector, applying stringent measures. However, Kenya's biggest bank by customer numbers is relying on its regional presence to drive future growth.
Yes, we have capped interest rates in Kenya, but 30% of the assets of Equity Bank are not eligible to that rule.
Despite 16 days into the inception of the new Banking Amendment Act that capped interest rates, the new interest rates have barely impacted on Equity Bank, with the company recording an 18% increase in profit after tax during its 9 months financial results.
The capability of the bank has not been affected, so the group mitigates that despite the huge growth in numbers.
The bank announced an after-tax of 15.2 billion, up from 12.8 billion shillings a year earlier. The bank attributed the third quarter success to its ability to deliver services through alternative channels that have made it more efficient. Through its mobile banking platform, Equitel, Equity Bank processed 30 million shillings worth of loans.
Equitel has captured 15% of the total market share of money transfer in the country. By the end of this year, we'll be above 30% of the total market share, and your guess is as good as mine, who will be the market leader in the next 2 years.
Equity Bank has announced a branch expansion freeze, choosing instead to focus on digital banking. The bank last month unveiled its easy banking platform, which it is using to take on telecom giant Safaricom by targeting the merchant business to grow revenues. Mombi Waroe, Citizen Live at 9.